Okay, so good day, ACC 124 students. So I am Jovid G. Cain, and I will be the one to discuss effective interest method of amortizing bond discount or premium. So the introduction, PFR's non-recourse bond discount and bond premium shall be amortized using effective interest method. And there are two kinds of interest rates. You do have the nominal rate, also known as the coupon rate or the stated rate appearing on the face of the bonds. While for effective rate, also known as the yield rate or market rate, this is the actual rate that the bondholder earns during the bond investment. This will be also the basis for computing the present values of the bonds. Now for effective interest rate versus nominal rate, to determine if the bond is issued at a premium or the bond is issued at a discount, you can actually take a look at the effective rate and the nominal rate. So if the bond is issued at a premium, effective rate is lower than the nominal rate. Kumbaga, the nominal rate is higher. While if the bond is at discount, so it means to say the effective rate is higher than the nominal rate. Again, premium, effective rate is lower, nominal rate is higher. If it is discount, effective rate is higher, the nominal rate is lower. So let's have, for example, on how to amortize using effective interest method. So let's start with discount. So on January 1, 2019, an investor acquired 1 million face amount of bonds dated January 1, 2019. The bonds matured on December 31, 2020, and the life of the bond is 2 years and 8% interest payable semi-annually. So semi-annually on June 30 and December 31. The cost of the bonds is 964,540, a price which yield a 10% effective rate per year. So to amortize the discount using effective interest method. So, by the way, why is it discount? So, as you can see, using the pro forma kanina, the effective rate is higher than the nominal rate. The effective rate is 10%, while the nominal rate is 8%. That's why the bond is issued at the discount. And then, if you're going to take a look at the face amount versus the cost, so the face amount is higher than the cost. Therefore, the bonds are issued or the bond is issued at the discount. Kasi mas mura lang yung cost kaysa sa total face amount of the bonds. So, to amortize the discount here using effective interest method, we are going to use the schedule of amortization. So, you do have here the columns for the date, interest received, interest income, discount amortization, and the carrying amount. So the first one is the January 1, 2019. The 964,540 is the carrying amount or the cost as mentioned in the problem. And June 30, 2019, this is the first semi-annual interest. So the interest received is 40%. How come it is 40%? Face amount na 1 million multiplied by the nominal rate of 4%. So, bakit siya 4%? It's because 8%, which is the total annual interest, divided by 2, since this is semi-annual. So, the basis or the rate we're going to use is 4% for the nominal rate. Now, for the effective rate, carrying amount multiplied by the effective rate. Or, kumbaga again, for the interest income, carrying amount multiplied by the effective rate. So, 964,540, the carrying amount, 5%, which is the effective rate for semi-annual. Since 10% is the annual rate divided by 2 for the semi-annual, so you do have here 5% for the effective rate. And then, to compute for discount amortization, so as you can see, the amortization is just the difference between the interest received and saka interest income. But in this case, for discount, the difference of interest income and the interest received. So, 48,227, which is the interest income, and the interest received is 40,000. So, meron siyang discount amortization na 8,227. And to compute for the carrying amount is the preceding carrying amount plus the discount amortization. So 964,540, the preceding carrying amount, plus 8,227, which is the discount amortization. So you do have here carrying amount at June 30, 2019 of 972,767. Now for the next payment, interest date, December 31, 2019. So interest received, same pa rin, 40,000 using the nominal rate. Then interest income, carrying amount multiplied by the effective rate. So the carrying amount here is now 972,767, which is the carrying amount way back June 30, 2019. So, hindi yung yung beginning, but the carrying amount preceding. Yan. 972,767 multiplied by 5%, which is the effective rate. And then discount amortization, difference lang ng dalawa, interest income tsaka yung interest received. And carrying amount is the total of the carrying amount from the preceding year or preceding date, and then plus discount amortization. Now for the next one, June 30, 2020, so interest received, which is at nominal rate, face amount multiplied by nominal rate, interest income, carrying amount from the preceding, preceding 981, 405 now, times effective rate, which is 5%. So to compute for the discount amortization, difference of interest received and interest income. And the carrying amount is the total or the sum of preceding carrying amount plus the discount amortization. And the last one, December 31, 2020, same pa rin po interest received, but in this case, we will start at the carrying amount. So, ni-skip natin yung interest income saka discount amortization. Kasi to compute this two, ito po, we will compute this one using yung workbook. So, let's start with the face amount. The face amount at year-end, syempre, it should be, or the carrying amount at December 31 should be at face amount of 1 million. And then, to compute for discount amortization, the balancing figure, 990, which is the previous carrying amount, and the face amount at year, or the carrying amount should be at year end is 1 million. And the interest income is the difference between the interest received and the discount amortization. Sum of the interest received and the discount amortization. So 40,000 plus 9,525. That is the interest income. That is how to compute for or prepare schedule of amortization using effective interest method of amortizing bond discount. Now for the journal entries 2019, first one is the acquisition of the bonds at cost. So debit investment in bonds, then credit cash for 964,540. And then the first one is the interest date. First interest date June 30. So you debit cash, then credit interest income for 40,000. And June 30, which is the amortization of the discount for 6 months based on the table. So since this is discount, so discount increases the amount of the investment in bonds. That's why you debit investment in bonds, and it would also increase the amount of the interest income. So you credit interest income for 8,227. And then December 31, which is another semi-annual interest received and amortization. So as you can see, note that the amortization is done on every interest date. So since this is June 30 at December 31, that's why we amortize the discount on every June 30 and December 31. Okay? Again, note that the amortization is done on every interest date rather than at the end of the reporting period. Now for 2020, semi-annual interest received, the discount amortization, and December 31 again for the semi-annual interest received and the discount amortization. And the last one is the full collection of the face amount. So these are the journal entries for effective interest method discount. Now the next one is premium naman. Effective interest method premium. So on January 1, 2019, an investor acquired 1 million face amount of bonds dated January 1, 2019. The bonds mature on December 31, 2021. The life of the bonds is 3 years and bear 12% interest payable annually. So annually, every December 31. The cost of the bonds is 1,049,740 at the price which yield a 10% effective rate per year. So same pa rin po, we are to compute or prepare schedule of amortization, and you do have also here the column. Date, interest received, interest income, in this case, premium amortization, and carrying amount. So bakit siya premium? As you can see, using the rates, no? The nominal rate, 12%, is higher than the effective rate na 10%. That's why the bond is issued at a premium. And if you're going to take a look at the amounts, the face amount is 1 million, which is less than the cost na 1,049,740. So you pay more than. So that if in that case, premium siya. So in your part, loss siya supposed to be na. But hindi siya automatic record as loss, but it will be amortized. And hindi siya charged as loss exactly, but it would decrease the amount of the interest income. So sayang. So first one, syempre January 1 at carrying amount, and the first interest date, December 31, 2019. So interest is nominal, 1 million times 12%. So 1 million the face amount of the bonds, 12% is the nominal rate. The interest income, carrying amount of the bonds, multiplied by 10% na effective rate. And then, premium amortization is the difference between the interest received and interest income. So interest received is 120,000, less interest income of 104,974. So you do have a premium amortization of 15,026 pesos. And the carrying amount here now is deduction. Kumbaga, preceding carrying amount less the premium amortization. So as you can see, if there is a premium or bond premium, it would decrease the amount of the investment in bonds. And it would also decrease the amount of interest income. Now, for December 31, 2020, the second year, same pa rin po no, interest received. And then interest income is now based on the previous carrying amount. Ito na, yung 1,034,740. Hindi yung at the beginning ha, but yung preceding. Ayan. So yung last year, 2019, December 31. 10%, which is the effective rate. And then, to compute for premium amortization, difference lang ng interest received and interest income. And lastly, the carrying amount is the preceding carrying amount less the premium amortization. And the last one is December 31, 2021. So in this case, first is the interest received, 1 million times 12%. 1 million na face amount and 12% as nominal rate. So skip natin yung interest income and premium amortization. So dapat yung carrying amount at the last date no, of the term, December 31, 2020, it should be equal to the face amount of 1 million. So what you're going to do, work back na lang yung premium amortization, 1,018,185 minus the 1 million. So yung previous carrying amount minus the face amount na 1 million. So that should be the premium amortization. And the interest income is work back po 120 interest received less the premium amortization 18,185. Okay, so work back po tayo. It's because if you're going to continue using the formula, yung effective rate, it would arrive with different answer. It's because of rounding off error. So if that's the case, work back na lang po at the last date. Okay. That is for the effective interest method premium. Now for the journal entries, same pa rin po, no? For the first year, first journal entry is yung acquisition of the bonds. And then second one is the interest received. Cash 120, then credit interest income for 120. and the amortization of the premium. Ayan. So amortization of premium decreases the amount of interest income. That's why we debit interest income. Okay. And then it would also decrease the amount of investment in bonds. That's why we decredit investment in bonds for 15,026 pesos. Then for 2020, first is the annual interest received. Then this premium amortization. 2021, annual interest received again. And then premium amortization and the collection of the investment in bonds. So these are the journal entries for the effective interest method premium. Now, let's discuss naman effective interest method for serial bonds. So yung first two is yung term bonds. So in this case, we will use serial bonds. Kumbaga, installment basis yung bonds. Yung payment of the bonds. Kasi yung kanina lump sum payment, one-time payment. No? This one, every year merong payment for the bonds. So, face amount of bonds, 4 million. Acquisition cost is 4,171,810. So, therefore, nasa premium on the bonds. Then, annual installment on December 31, 2019, every year na 1 million. So, every year, magbabayad siya ng 1 million. Or, in this case, since investor pala po tayo, no, so makaka-receive ka ng 1 million every year. So, date of issue, ayan, January 1, nominal is 10%, effective is 8%, and same pa rin po, we will prepare schedule of amortization. But in this case, aside from date, interest received, interest income, premium amortization, and the carrying amount, meron siyang additional column for principal payment. Now, for the first one, January 1, this is based on the cost. Yeah. Then, for the second one is the interest date, December 31, 2019. So, interest received at nominal rate, again, same pa rin po na nominal rate. 4 million times 10% na nominal rate. Then, interest income is based on carrying amount. Carrying amount, 4,171,810 times 8% na effective rate. Then, premium amortization is the difference between the interest received and the interest income. And the principal payment which is given, annual installment na 1 million. And lastly, to compute for the carrying amount, preceding carrying amount minus the principal payment na 1 million and also deduct the premium amortization, 66,255. Okay? So, yung parang same-same lang sa yung kanina, no, but in this case, meron siyang principal payment. Now, for the second year, as you can see, the interest received is now 300. Bakit siya 300? 3 million, which is the new face amount. Kasi nga, di ba, 4 million siya dati. Less the annual payment na 1 million. So, naging 3 million na lang. Times 10% na interest, nominal rate. So, the interest received is now 300,000. Interest income is carrying amount multiplied by 8%. Premium amortization is difference between the interest received and the interest income. And the principal is given, principal payment na 1 million. And the carrying amount is preceding carrying amount less principal payment less premium amortization. And for next one, so in this case, the interest received is now 200,000. So, naging 2 million na lang siya, times 10%. Interest income, same pa rin po, carrying amount multiplied by the effective rate of 8%. So, the carrying amount is the previous sa yung preceding December 31, 2020 na 2,053,999 times 8%. Then, premium amortization is difference between the interest received and interest income. And the principal is fixed. Yan. And the carrying amount is preceding carrying amount less the principal payment less premium amortization. And for the last year, 1 million, which is the balance of the face amount of the bonds, times 10% the nominal rate. Then interest income, But in this case, no, skip pala no kasi last year pala yan. So, medyo nakalimutan pa na. So, carrying amount, the last payment of the principal should be 0. So, bakit 0? Kasi nga, paid na yung 1 million. Principal payment na 1 million. And then, premium amortization is the balancing figure, which is 1,018,319, which is the carrying amount on December 31, 2021, less the 1 million principal payment. So, work back mo rin yung interest income, which is interest received na 100 less 18,390. So, that is how to compute for schedule of amortization using effective interest method for serial bonds. So, let's have the journal entries. The journal entries 2019, the acquisition of the bonds, January 1, and then the collection of the interest and the principal payment. And then amortization of the premium. So, amortization of premium decreases the amount of the interest income. Then, 2020 naman is the collection of the interest and the principal amount of the bonds. Yung installment. And then, interest income, investment in bonds, this is the amortization of the premium. Now, for 2021, same pa rin po, no? Collection of the interest and the principal amount of the bonds, installment. Then, the amortization of the premium. And lastly, for 2022, collection again of the principal amount of the bonds and the interest. And the last amortization of the premium. So, these are the journal entries for effective interest method under serial bonds. Okay, so we're done with the effective interest method. So, the next one is let's compute for the market price of the bonds. So, there may be cases na hindi given yung market price or yung cost. So, what you're going to do, you're going to compute using the present value of the principal and the interest. So, like here, for example, this one, face amount of bonds 3 million. So, hindi given yung cost. Kayo yung magko-compute ng cost of the bond. Date of issue of the bond, January 1, 2019. Nominal rate is 6%, effective rate is 8%. So, based on this one, you can actually conclude that the bond is issued at a discount. Kasi mas malaki yung effective rate kaysa sa nominal rate. Interest payable annually December 31 and date of maturity December 31, 2021. So the relevant present value factors here are the present value of 1 and present value ordinary annuity of 1 and present value of 1, which is 2.58 and 0.79 respectively. So let's compute now for the present value of principal and the present value of the interest payment. So for present value of principal, 3 million, which is the face amount of the bonds, multiplied by 0.79. So bakit we use present value of 1? Kasi nga, di ba this is lump sum payment, one-time payment yung principal that is to be paid at December 31, 2021. So, remember this pro forma. Ayan. So, present value lump sum payment, that's why we use present value of 1. Okay, so we use present value factor of 1. Now, for present value of future interest payments, 180,000, which is the annual interest payment. Take note, annual interest payment. So, installment siya. That's why we use present value ordinary annuity of 1. Okay, kasi nga, this is installment and equal basis. Every year, makaka-receive ka ng 180,000. That's why we use present value ordinary annuity of 1. So, add mo lang yung dalawa. That is now the market price of the bonds, yung cost of the bond. Now, for market price of the serial bonds, so in this case, meron siyang annual installment. So, face amount is 6 million, annual installment is 2 million, date of issue January 1, 2019, nominal interest rate payable annually every December 31 is 12%, an effective interest rate of 14%. So, the present value factors are present value of 1 only, no, at 14%. So, this one. 1 period, 2 periods, and 3 periods. Now, to compute this one, let's compute first the total cash flow per year. Cash inflow per year. Then, multiply that one sa present value of 1. And you can now compute for the present value. So, for the first year, 2 million, diba ito yung marireceive niya every year. Plus the interest received na 720,000. So, how come, or how do we compute 720,000? The face amount of the note, of the bond, 6 million times 12% na nominal rate. So, the total cash inflow is 2,720,000. Multiply by the present value of 1 for 1 period. So, you do have the present value of 2,385,440. Now, for the next year is 2 million pa rin yung ma-receive niya for the principal plus interest received na 480,000. So, bakit siya 480? Kasi nga, the face amount of the bonds is now 4 million. Kasi we deduct 2 million the annual installment. Times 12% the nominal rate. So, 480,000. The total cash inflow is 2,480,000 multiplied by the present value of 1, 0.770. So therefore, the present value here is 1,909,600. And the last one, December 31, 2021, 2 million plus 240 interest received. So in this case, 2 million is now the balance for the face amount of the bonds multiplied by 12% na nominal rate. So the total here is 2,240,000 times 0.675 na present value of 1 for 3 periods. That's why the present value is 1,512,000. So add mo lang yung tatlo, the market price of the bond is now 5,807,40 pesos. So by the way, why did we use the present value of 1? Kasi nga remember, diba, if it is unequal installment, diba, installment siya kasi every year makaka-receive ka ng ganito. Since this is unequal, diba, hindi same yun siya every year. That's why we use present value of 1 as the present value factor. Okay? Ayan. So, end of presentation. Thank you for listening. And these are my references. Thank you po. Goodbye and God bless.